Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, and finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist.
And we are the Money Café.
We
G'day,
are
Stephen.
the Money Café. Alan, hi Alan. Great to talk to you again.
Now, Stephen, markets down again last night. It's all happening on the markets. It's not a crash, but it's certainly what you'd call a subsidence at the moment.
Yes, a crashette, 4 in a row.
A crashette.
And, yes, and big tech, bubble deflating, I think is probably the best way to describe it. And all the big tech stocks, well, actually not all of them. Amazon is still only down about 10% from its record high. Alphabet is actually still near its record high at 3.46 trillion. But, you've got Oracle down 33% from the peak. You've got poor old NVIDIA, cracked 5 trillion, now down to 4.46. So, they're sort of in the 10 to 15% range. And
so you'd call it a correction, and it's definitely a correction officially over 10%, right? Well, for a lot of these stocks anyway. The Nasdaq, I don't think the Nasdaq is down 10% yet.
No, we're not in the broader market. We're not in correction territory, but across the Magnificent Seven, collectively, we are. So, and there's ups and downs within that, but and there's still all these crazy round robin deals. I don't know if you saw the one last night with Anthropic, which owns the Claude language model. You got Microsoft and OpenAI. It looked like they're breaking up because Microsoft's announced they're investing $5 billion overnight in Anthropic. Well, NVIDIA is investing $10 billion in Anthropic, and of course, all that money round robins back to them with purchases of chip and renting of cloud space. So I think OpenAI and Anthropic, with these sort of unlisted, philanthropic, weird corporate structures, they still are at the epicenter of what people think is unsustainable, but they are both being propped up by all the other listed big tech. And the round robin goes on and the arms race continues.
In fact, what they're doing is emulating Japan's Kairetsu model, which is, it's been around for decades. All the big Japanese companies all own bits of each other, and they all are very close. And they've got a name for it in Japan called Kairetsu, where, there's the Mitsubishi Group and they have mining and engineering and cars and so on. And I think that's what the big tech stocks are doing and the companies are doing in the US. And the thing is that it's all very nice when things are going well, but it can really implode badly on the way down because they tend to implode together. So we'll see how it stands up, really. It's certainly the Kairetsu model in Japan didn't really save them from, the crash of the 90s and then stagnation for years.
Yeah, but I think what's different here is that if you look at the market cap of all the big tech, NVIDIA is still 4.46 trillion, Apple's still 4 trillion, Microsoft is still 3.67 trillion, Alphabet's 3.46, Amazon 2.4, Meta 1.5, and even Tesla's only down 13% from the all-time high, still worth 1.26, and Broadcom, don't forget Broadcom, has only fallen 11%. And still worth 1.6 trillion. So the Japanese never had, the 7 most valuable companies in the world doing their propping up system with global revenues from global domination on the highways and the byways of the internet, which is what those 7 companies have achieved. So I don't think it's sustainable because those companies can afford to do anything, but the bond yields are blowing out. Like Oracle's 30-year yield blew out to a 1.7% premium to US 30-year bonds. And even Meta's premium got above 1% this week on their 30-year bonds. So the bond markets are saying your credit worthiness in the long term is looking risky, even riskier than the US government with its $37 trillion of debt. And, it is a debt-funded binge. And the debt investors are saying, well, hang on a minute. And, you can't just borrow hundreds of billions of dollars. You've got to get a return on that. And people still can't see the return to justify the spend.
That's right. And the spend, the reason they're having to borrow is because the spend is now outstripping their cash flows. I mean, these are companies that have got very large cash flows, but they're now spending far more than they can afford to spend, so they're having to borrow. And as you say, that's putting a lot of pressure on the price of their debt.
Indeed. Now, we can't leave the US without mentioning that it was unanimous, all but one, to release the Epstein files overnight, Alan. So I don't know why Trump bothered, but I presume the Senate will come through, and then the Justice Department's got 30 days to serve up full Epstein, albeit with a few redactions, no doubt.
Yeah, it's been a very peculiar situation there. I mean, Trump could have released those files himself at any time, but he decided to encourage the Congress to do it. I don't know why.
But his wings have been clipped because he was going to suffer a revolt. He's caved. It will be embarrassing. People are worried about the midterm. So I think we have seen peak Trump, and people will remember the defeat on the Epstein files as the major turning point, I think, where the Congress and the media and everyone else as victims said that even the world's most powerful bloke who's taken over the Republican Party, he can't force this one on them. So that's healthier for democracy, and there'll be more people dropping like flies. Larry Summers overnight, he's announced he's withdrawing from public commitments. He was head of Harvard, Treasury Secretary, prominent Democrat, and he was doing saucy email exchanges with Epstein, getting
and now
love
he says
life advice.
He's embarrassed by it now.
Yeah, so 20,000 emails. I mean, so if you've got a cozy email exchange with Epstein post when he was charged, good night. So Prince Andrew, Peter Mandelson, Larry Summers, there'll be many more. But what's left to come? I think there's there'll be a lot more people dropping, I suspect, when the full files come out, and then and the damage to Trump will be substantial. But we'll see what happens from there.
There is a website where you can search the Epstein files. So if you Google Epstein document search, you'll find it's simply a search field. That's all with that heading on it. So Google that if you're interested, and you type in a search term, and it'll throw up the email or Epstein document that's got that search term in it.
Now,
Stephen. Now, how many boards are you standing for this year, Stephen?
Oh, look, my market research exercise on the robustness and fairness of the corporate election system in Australia, Alan, will involve research with 17 companies who have accepted my nomination for the board. And yesterday, the first results were in. Carnegie Clean Energy, 21.4% in favour of the serial pest candidate.
You got over 20%. You're doing better than One Nation, Pauline Hanson.
So,
is that a record high vote for you?
No. I got 54% at Woolworths, but it was the same issue. Woolworths back in the day put out a neutral ballot paper, and people just donkey voted down the page. And Carnegie Clean Energy made the same mistake. They put out a neutral ballot paper, whereas the smart companies say on the ballot paper they call the resolution election of self-nominated, non-board endorsed Stephen Mayne. And they made the mistake of just saying election Stephen Mayne. And people just went, yes. And 21.4%, there you go. So I was laughing because in the notice of meeting, they said, he only owns one share. And I'm going, come on, you've invaded my privacy. That's a matter between me and anyway, only owned one share, 14 million votes, mate. Thank you very much.
That's fantastic. But
it's only downhill from there because I got an email from HMC Capital. I'm running for their board today. And 70 minutes after the proxy voting closed at 11 o'clock on Monday, the company secretary emailed me and said, you only got 1.43%. Do you want to withdraw?
And you said?
I've offered him a conditional withdrawal if you promise to do a hybrid AGM next year and also reveal the headcount data, i.e. not just the shares for and against, but the shareholders for and against, because I obviously do much better with the smaller shareholders than the bigger shareholders. And I've said, you don't have to reply. I'll leave it up to you. So their meeting will start at 11 a.m. today, which is after this recording, but before we will be public. And if I've withdrawn, you'll know that they've agreed to that deal. And if the results are made public and I've run, then they've decided they want to stick with their silly physical AGMs in Sydney, which is the main reason I'm running for quite a few boards this year, which is to get with the program and have hybrid AGM. So look, it's going to be interesting. I do think I've actually had an impact, Alan. I've run for about 10 boards, citing the fact that they did a placement to the big end of town and failed to follow through with a share purchase plan for retail shareholders. Now, there were 24 of these in October, which was a record, above 15 million. 24 placements with no share purchase plan. There's only been 2 in the last 2.5 weeks in November. So I think I've actually helped curtail that practice, because they all now know if we do that, that nutter is going to run for our board. He's running for 10 boards now. So that gets around the lawyers and Perth, the bankers. And so we've had, Rox, Arafura, Eris, all these sort of mining companies, placement. Oh, and we're actually going to do a share purchase plan for retail on the same terms. And I say, well done, boys. I'm not running for your board.
And they go, phew, thank God for that.
Yeah. So that's the most important part of it. If you can stamp out that practice, it is actually a serious benefit for retail shareholders. So that's the most sort of serious reason for these board tilts, because that practice is out of control, and I'm mad as hell not going to take it anymore. And then the physical AGMs thing, it's a minor point on the governance scale, but it's also just good practice.
I think it's an important point for companies in Perth, especially.
Yeah.
That's right. Well, I've got 6 Carnegie Clean Energy. What's going on with them? I mean, they're a wave energy business, aren't they? They were going to.
Oh, that's right.
Electricity out of waves.
Correct. Well, they've got offices around the world. They've got projects off in Oregon and Europe, and I was reading their PowerPoint yesterday because there was no webcast from the Swan Yacht Club in East Fremantle at 9:00 yesterday morning. So I had no idea what was going on when I'm running for the board, but their PowerPoint is I was getting stuck into solar and wind, intermittent, unreliable, whereas wave energy, it'll give a lot of reliability. So they're all in on wave energy, but the fact is they've got $192 million of accumulated losses, and the market cap's only 30 million. So some of my vote will have come from angry shareholders wanting to send them board a message about the 160 million you've blown on wave energy.
The problem is that solar and wind have collapsed in price. I mean, they're getting priced out. It's all very well. Solar is independent. It only happens when the sun shines. It's true, and waves go all the time. But really, they're strode. I would have thought they're not going to have much place for wave energy. But anyway, who knows? Maybe I should interview them. What do you think?
Yeah, why not? I was actually quite lucky because Mike Fitzpatrick, the old AFL president, he's on the board. And he used to own more than a billion shares. And then they did a 50-for-1 consolidation. So he went down to 20 million shares. But they were very kind to me because I used to own 9 shares. And when they did their 50-for-1, they let me stay on the register with 1 share. Whereas quite a few companies round you down in that situation and just eliminate you from the register. So that was the history of how I finished up with 1 share. But look, it's a good technology, and they've been plugging away for more than a decade now at this. And I hope they succeed. I just wish they'd run hybrid AGMs so that the rest of the country could tune in to listen to all their very exciting technology about how they're so much better than wind and solar.
Yes.
Now, we can't get onto questions, Alan. We got to cover DroneShield, I think. You've interviewed that CEO of DroneShield.
About 5 or 6 times.
He's your most frequent flyer, isn't it? You've been very excited by him. I mean, everyone's so excited about the world's greatest anti-drone company. So, give us your take. You know the man well.
Well, look, I don't think I do know him well. I mean, I've interviewed him a few times, obviously, over the years, including way back 5 or 6 years ago when they were just starting out, and they've got this technology that shoots drones down. and they're starting to get some traction. They've been selling drones to Ukraine and so on. It's a drone technology or anti-drone technology to Ukraine, and starting to get some deals. And then last week, Oleg Vornik, the CEO, plus 2 directors,
including the chair,
reduced their shareholdings to 0. Oleg sold 15 million shares for $70 million.
He's off for 50.
50,
the total,
that's right.
The total of the three of them was 70. And the value of those shares has now dropped to 50. So the people who paid them 70 are very angry that the stock has since tanked from $3.35, their exit price, to $2.45 yesterday. So a 27% wipeout in a week.
Well,
or because of the insiders exiting, but not just exiting partially, exiting all of their holdings and 3 at once. And that's something we've never, ever seen in the Australian market.
That's right. So it's more than just the people who bought off them that are angry. Everyone's angry because, they haven't explained what's going on. I mean, there was a story in, I think it was Rear Windows or somewhere in one of the papers saying that Oleg Vornik has had to fund the purchase of a house in Bondi, which he has to renovate. So it's all about paying for the house. But really, that's not good enough, I think.
Yeah.
So I've been trying. I've emailed him and I've requesting an interview. I've tried ringing him a few times. When you ring him, the phone says this service is unavailable or switched off. You can't. You can't even leave a message. It's just not. I just don't think it's good enough. I mean, what the hell are they're doing?
Yeah. Well, I mean, I'll just a couple of contrarian things like our system, where when you receive free shares for an incentive that's gone well, and that's what this was. A lot of this was, you've hit bonuses, you've hit targets, therefore here's a whole bunch of shares. Our system is you often have to pay tax up front on that. So you're suddenly in possession of paper and the tax office is saying, give us 40% of that in cash. So that does lead to a lot of CEOs selling down when they get their performance shares to pay the tax bill. But they don't sell the lot. They don't do it on the first day. They don't do it the day after, or they've actually had to withdraw an announcement because they did an announcement saying $7 million of contracts with the US government. And then they come out and say, we withdraw that announcement. They're actually old contracts. It's a re-announcement. And then, so the market looks like they've been juicing the share price up with the news flow to get the share price up. Then they've dumped all the stock. Then they won't talk to anyone. So all the optics of that have combined to say, but look, at the end of the day, Alan, still, the market cap today is $2.6 billion. And the contributed capital by the shareholders is, it's not even 400 million in terms of the cash that shareholders have put in. If you look at the balance sheet, contributed equity is about 320. There's a bit more since then. So it is still a 5-bagger at the current share price. It's not like they've lost $1 billion and gone broke. So you need to keep that in perspective. But the fact they're on the run and not talking is terrible. They will cop a class action, I suspect, from people who bought the stock at inflated prices, maybe, but I can't wait for their AGM in May, but they're also one of those companies that does physical AGMs to hide from their shareholders, which is always a red flag for me.
Oh, right. Do they? No hybrid for them. Right.
No, so disappointing. But quite a scandal. And the fact that it's a tech, he's got a Russian background and, it's a war company, and because we just don't do defence stocks. So that's why people were so excited by the thing is how the hell does Australia develop this anti-drone technology where the share price peaks at $6 and the thing was worth more than $5 billion at the peak, and seemingly countries all over the world were buying it. So we've never seen a story like it, and then to have this thrown into the mix is just a remarkable situation.
Yes. All right, we better move on to questions, do you think?
I agree. Let's do it.
Okay, right. So before we do that, let's hear a quick word from our sponsor.
The market never sits still, so staying ahead of the curve matters. Intelligent Investor Premium helps you invest smarter without spending hours on research. You'll get buy, hold and sell recommendations on more than 80 Australian and international stocks, special reports on big investment themes, market insights, interviews and Alan Kohler's popular weekend briefing. The best part? You can try Intelligent Investor Premium for free for 15 days, even if you've tried it before, and you don't need to provide any credit card details. Just visit intelligentinvestor.com.au.
Okay, Sean in Melbourne says, "Hi guys, my father deceased 2014 and mother 76 have an SMSF. Since dad died 10 years ago, I'm 47, have helped mum manage the SMSF. It's got 2 small commercial offices rented and some shares and a family trust. Mum now can't manage it all given her age, so she's handed the financial power of attorney to me. I find the work meetings and compliance, auditing, real estate agents, accountants, planning meetings, etc., taxing on me personally. I wonder if I could just sell the properties and move all the funds to basic, boring, reliable industry super fund where mum draws a pension and it's easy as. Is this possible given she's 76? Can you move the assets from an SMSF to an industry fund? It would certainly be cheaper, as the financial planner charges a fortune to just invest in a high dividend ETF. Drives me mad." Yes. Well, what do you think, Stephen?
Oh, look, definitely you can you can definitely sell the properties and you can unscramble the SMSF. I don't know about actually, you can definitely do it into a retail fund. I mean, the industry funds are meant to be more for, the when you're working, but there's any number of superannuation funds and providers that you can look after. I mean, my mum, it's just cash and shares. There's no advisor. I guess it's sort of might help out a little bit, but you definitely don't have to stay in an SMSF, and certainly the properties do make it more complicated. That's the whole thing. Direct property, it's not a passive investment. It's a lumpy direct investment. And but look, you can fire the financial planners. If people are overcharging you for your fees, I mean, you can certainly tweak those things around.
But also the industry funds will let you in too. I mean, they're not going to knock you back. But that's probably the industry funds probably is cheapest and simplest. But you can also just buy an allocated pension from someone. You probably do need a financial advisor, but see if you can find a financial advisor who doesn't want an ongoing fee, is just prepared to help you set it up. And you might have to pay them a couple $1,000 to do that, but that's okay. And then they set it up for you and go away.
And Sean also has a PS. You've never discussed the work that children have to take on from aging or ill parents when it comes to finances. Look, woe is me. I mean, I guess that's true. I mean, I would probably cynically say, but Sean, it does often pay quite well too in the long term if you inherit a big pile of stuff from helping out your parents. But look, it is complicated.
Right. Stop complaining.
That's right. You own 2 commercial properties. You're doing better than most, Sean. Now, David says, long-time subscriber, first-time listener, you're my favourite podcast each week. I was listening this week and hearing James's comments on AI being, quote, souped up internet searches, and I had to email. The breadth of AI functionality for me has been amazing. And David reckons he's replacing software developers as coding new internal applications and workflow automations can be done in seconds by vibe coding. He's replacing marketing and graphic professionals by using marketing agents. He's getting AI to read 1,000-page tender briefs in seconds to pick out what's relevant. He's had a 90% reduction in his data entry through parsing and restructuring large data sets, etc., etc. So David is saying in his business, he's got all sorts of productivity benefits across a range of areas, and that we shouldn't talk down the transformational nature of the functionality of AI, and he is living it every day and loves it. So don't.
But he also
search.
He does finish with a question: do you think the market is bubbly? And the answer is yes. Of course it is. It's definitely a bubble. I mean, and it's going to, if not collapse, then definitely subside as it's starting to do now. I mean, there has to be some kind of reckoning at some point, and the prices definitely got too high.
That's right. And I would say that for all of the power consumption and grunt and compute time that is being spent by big tech delivering David all these benefits, he's not paying much for that, and they are losing money delivering him that service. And so, yes, he's getting a benefit from someone else's losses at the moment. And that's the bit that people think is a bubble, is they can't see how delivering all these windfalls can possibly be a commercial venture for the people doing the $400 billion a year in CapEx to make it happen. Your turn, boss.
Well, I'm going to skip over the question about someone who's read Warren Buffett's last shareholder newsletter and wants me to have a few final thoughts. So, I'm still going. I don't have final thoughts. I've got ongoing thoughts every week in the weekend briefing, if anyone wants to read them. What?
Well, I was going to say, I had one little, what I do when I give a speech and people say, what do you want? You're always banging on, whinging. What do you want? What works well? And I say, well, four things. There's four things. You want great leaders. You want great leaders working within a well-defined system with good incentives for good outcomes. You want great fast data on the performance of the leaders and the performance of the system. And then you want a very easy ability to change the leaders or change the system based on the data. And a non-violent change of government is a good example of a system working. So there you go, Jason. There's a few final thoughts on what should happen with the world. Now let's go on to it's actually
Lloyd.
Your turn.
Lloyd says, I would like your opinion on businesses which in all respects appear profitable and well managed, but are operating behind a tariff wall by virtue of anti-dumping legislation. One such business I was recently investigating is Caprel, which makes aluminium extrusion for residential boats, vans and trucks. It seems to tick all the boxes, trading at a low multiple, but the product is not especially high-tech or innovative. So my first thought was, why haven't Asian imports killed this business off like so many others? And some Googling showed that they are operating under the protection of anti-dumping laws, and they continuously lobby the government to keep them in place. But the government could easily change their mind at any time as part of some special deal with foreign countries in our region. What are your thoughts? Well, yeah, that's true. I mean, I haven't done that Googling, so I wasn't. I'm not aware of what anti-dumping laws that Capital is operating behind, but I think that's right. Clearly,
I agree. Like you've interviewed Capral's impressive CEO, Tony Dragicevic. And he's a good guy. The business almost went broke, but he sort of turned it around. And I actually think this is right. They do have a form of protection through the anti-dumping thing. And I think if you polled most people, they would say they're okay with that. Because this is a legacy business. It used to be called Alcan back in the day. Remember Alcan aluminium foil? So, extrusion, value adding. We've got the bauxite, we've got the alumina, we've got downstream aluminium manufacturing, not just a few smelters, but we go the next step with Capral. And I don't want to see Capral going broke. And if they're doing a bit of anti-dumping to keep cheap Chinese product out, I'm okay with that. People will argue that's putting up the price for consumers. And when there's these aluminium extrusion products going into houses and boats and cars and trucks, that people are paying more because there's this protected Australian provider. But it's only cents in the dollar. And I don't want to see Capral go broke.
Yeah.
So there you go. Now, Ryan says, can you break down what's happening with Wesfarmers at the moment? They've been crashing over the last 2 weeks, and I'm hoping you can explain what actually happened. Do you think the special dividend they announced will have any impact on the falling share price? Well, Ryan, look, when you say it's crashing, it's gone from $93 to $80, but it's still got a market cap of $92 billion. I remember when Wesfarmers did a post-GFC emergency capital raising, and they did at $13.50. And they did a $900 million placement to institutions at $14.25. So the fact that it's gone from 93 to 80, it's a bit like Commonwealth Bank. It flew too close to the sun. It got onto too big a multiple, and it is corrected. And yes, they have paid out $1.50 in a special dividend and a capital return. And so maybe a few people sold after it went X that. But there's nothing wrong with Wesfarmers. Great business. And it's just come off a bit because it went too high. What do you reckon,
Alan?
Right.
Oh, yeah. It is a good business. Bunnings, Kmart, So yeah, I mean it's a very good business, and they seem to be now branching into other things, lithium mining, although that's a difficult business at the moment. But yeah, look, I mean it's a very well run company.
And they are our one true conglomerate where they're in a range of industries. I mean, maybe you can argue Kerry Stokes now with Seven Group because he's added sort of Boral and he's got sort of Coates Hire and Caterpillar trucks, but it's all sort of industrial services. But
yeah, but I think Wesfarmers is fundamentally a retailer. Let's face it. I mean, it's got a few other things. It's true, but it's.
But I like the idea that they're still going they've still got their chemicals and industrial services, and they've got they've got out of coal, but they're doing a mining thing, and so I think good on them for what they've built there. But you're right, like 80% plus of the value is the retail operations.
Yeah.
Now Peter says, "Oh, you go." Yeah.
Share purchase plans often only accept a fraction of the up to 30K applied for when it's well supported. So firstly, a call out to both Linus and Cobram Estates Management, who were both in the money and accepted retail shareholders' applications in full. Well done for the retail shareholder. Now, you'd be all over this, wouldn't you, Stephen?
Well, look, Linus was just wild. So they did a $750 million placement at $13.25, and they followed up with a $75 million share purchase plan. Now, they've got 47,000 shareholders. So if they had all applied for the full $30,000, that would be $1.4 billion in applications. So I was criticising them, saying 75 million is too skinny. Why are you giving 750 million to the big end of the town and only 75 million to the small fry? And to their credit, they ended up accepting all 182 million that came through. So what the question they were saying is, well done for ignoring the cap they announced at the start of the offer and accepting all of them. And the stock popped up to $16.50 the night before they announced the outcome. So the people who participated ended up making 30%. I mean, I went in for it, had a good quick profit on that one. And but what about all the shareholders who didn't participate and left money on the table? I mean, 87% of the potential applications never came through from the 47,000 shareholders. So this is retail shareholders acting irrationally, not opening their mail, not being told by NetWealth or Hub or whoever else is their middle person that there's a good in-the-money offer, get into it. And that's one of my biggest bugbears with the system is retail shareholders are not voting, they're not opening the mail, they're not participating in the money capital raisings, they're not acting in their best interests. And the system is terrible in terms of getting retail shareholders to act rationally and participate in elections. But well done to Linus for, handing over the cash to everyone who did apply for something, because I've been scaled back over 100 times, Alan, where you apply for 30,000 and they say, no, too much, here's your money back. I mean, that happens all the time, and a lot of people give up on SPPs because they just assume they're going to get scaled back to not very much.
Yeah.
Sorry for that rant, but there you go. Now, Ben says all three of you, it must be James as well, he's the smartest one, have a holistic understanding of economics and awesome critical thinking skills. Both are needed in politics. It's Christmas soon. Will at least one of you make my day and run for office? I will volunteer for your campaign. Well, look, that's not going to happen, Ben. We probably should briefly mention Jess Wilson, though, while talking about people running for office. And I think what Jess Wilson could do, this will tie in with Ben, if Jess Wilson wants to win,
we should explain who Jess Wilson is for those who aren't in Victoria. Yeah,
well, Jess Wilson is the new 35-year-old millennial Liberal Party leader in Victoria after a coup yesterday against the very short-term predecessor Brad Batten. So can the Liberals turn around their fortunes in their worst state and stop a fourth victory for Labor by going for the young female millennial to turn it around? And I was going to say Jess Wilson should recruit James Thompson to be one of her new recruits because they've got to get some serious talent. And I do agree with Ben that James would be a fantastic politician because of his critical thinking, his charm, his calmness under pressure. What do you reckon? Do you reckon we should try and get James Thompson into politics, Alan?
Actually, I'd be struggling to think about which party he'd stand for, actually. which I suppose
I
is a
agree.
good thing.
That's his great strength. He is Switzerland,
That's
isn't
right.
he?
Yeah, Switzerland. Yes. No, but you're standing for office, public office, aren't you? And how many times? 17 times.
I'm running 17 times in the next 18 business day, Ben. So I'm standing, and but look, journos can get frustrated in public office because when you're a journo, you can ring anyone you like, you can say what you like, you can move on to the next story after 24 hours. Once you're in politics, you've got to be flexible, negotiate. You can't talk about stuff that's not in your area. It's actually quite frustrating. People don't realise how liberating life as a journalist is sometimes. So I think, Alvin, you'd make a great politician, but you'd hate the factional rubbish that goes on.
I couldn't stand it. To be honest, I couldn't think of a worse way to live your life. I mean, as a politician, I couldn't imagine anything worse. So
no, I disagree. There's nothing more. Power is an aphrodisiac. When you're sitting around a table and you've got brilliant people pitching you, like your City of Melbourne councillor, and all these people are coming in and pitching you, and you're making decisions, allocating capital, appointing people, changing rules. If you can just go straight from being a journalist into that powerful cabinet position, you would love that. You would love to be a cabinet minister and influence climate policy and the budget. You would love it. But you'd hate all the rubbish you've got to do to get there. That
is so true. Okay. Next one is from Seamus, who calls himself just another carpenter. So there's nothing wrong with being a carpenter, Seamus. Are wages really not growing due to low productivity, or is slow wage growth a disincentive for companies to innovate due to them knowing their labour unit costs have actually fallen adjusted for inflation quite a lot in the past few years? He speaks of his own experience in residential construction, where wages and productivity much lower than on commercial infrastructure projects, and methods haven't changed for the best part of 100 years. Every day on a building site, I see tasks completed using physical labour in a highly inefficient, labour-intensive way. Seeing this, I always think to myself, if everyone here was earning double the hourly rate, we would have to use that piece of equipment much better. I think that's an interesting point, and I interviewed recently a company called Fast Brick Robotics, which has built a bricklaying robot, and they're starting to get some traction, although, I don't know whether they'll actually make it in the end. But, they've been plugging away for years and never really got anywhere to have a bricklaying robot. I can't imagine a carpenter robot, but maybe that can come. But look, I do think that one of the reasons for low productivity is that companies haven't had to invest much in equipment, not so much because of low wages, but because there's such a plentiful supply of labour. I mean, the high productivity, high population growth has meant that there's been plenty of labour and companies haven't had to worry about it. I think that has contributed to low productivity.
Yeah, I guess you get situations like, in the Pilbara where you've got very strong unions and highly paid workers, and the Rio Tintos of the world will invest hundreds of millions in driverless trains to be able to, get rid of all their train drivers. But look, we do still have the highest minimum wage in the world. You've got 12% super. I don't really agree that because wages are so cheap in Australia, no one invests in tech. But I also do agree that probably, on less scaled residential construction, it's probably quite difficult to bring in the big kit, bring in the high tech stuff. And so look, Seamus is probably right. On small residential projects, you do see lots of people working away, and you sit there saying, is that really very productive? That's probably a part of the high costs of construction in Australia. But anyway, now, Alan, I've actually got to go, would you believe? Because do you know that Jeff Wilson, the listed investment company guy, he is running 7 AGMs today, 45 minutes apart. And the first one started at 8:30, and I sent a proxy to that one, and I'm going to go to the next one starting at 9:15, then 10 o'clock, 10:45. He gives us a little 2-hour break for lunch, and then there's another couple after lunch. So can you believe this one guy is having 7 AGMs on the one day. So my sort of plan is, well, I'm going to string the debate out for more than 45 minutes, because what right do you have to say you can't keep talking, shareholders, because I've got another meeting? I just assumed when I scheduled these 7 meetings that none of you would turn up and I could just rush through the most important governance meeting of the year. So off we go to annoy Jeff Wilson for a few meetings.
Well, you're doing that. You're saying that you can't talk anymore. You've got to go. So, okay.
That's right. I am too. It'll be an excuse not to go to the HMC Capital meeting where I'll get my miserable 1.43% read out. But anyway. All right, Alan. Well, look, you better sign off. But it's been lovely to chat to you, as usual.
Well, we've just about got through the questions. So thanks, everyone, for listening to today's episode of Money Café. I'll be back next week with James Thompson. Send in your question to themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report, now part of Intelligent Investor and a person on the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.